Sure. Let's break this down again. Somebody said kids in video BOOM900 audio so I think I'll be doing this. I won't be doing much of this because I want to advise people to join mentorship. Just any other mentor that you come across who feel is the right person for you, fits the right style that you have, pay for mentorship thing, go for lessons. Things will be simple. So normally I don't say a lot more the video because I want to make it hard for you to get the concept. If you speed, you can just get it without having to get the content regular down. So I'm not saying much get the videos because I want to promote this thing. I want this habit or it's more information. You guys have to pay. We pay to get learned. We paid to get taught, and there's no how you're going to get free information. It's here and there, and I feel it's free, but some things are left out. Anyway, let's dive into the concept. Candle range theory. What is candle range theory? That's not my assignment, or that's not my area to, or my task to break down. This one goes for you. Candle range theory. What does it do? How do you use it? And how do you identify that? So candle range theory, I think my way range the difference between the highest and the lowest. We are arranging like a difference between the maximum and the minimum point, or maybe I'm talking about the extremes. Arrange talks about the extremes, the lowest and the highest point, or in this case, because we're talking about candles, is the high and the low of the candle. What does the theory say? Candle range theory in there are three, is a set of three candlesticks. Either you are in a bullish market, say this is a bullish market, I'll use blue for such. This candlestick is a bullish, and then the one that follows this candlestick should be bearish. But before it's another candlestick in your thing, what are you looking at? This candlestick in a wiki. Let's assume that we have a wick at the top and at the bottom. It makes sense. It makes more sense how there is another wiki. I'm not saying okay there is no wiki, but not to my observation. I realized that it works best another wiki. So you're going to mark your range high, candle range high, CRH here, and then you're going to mark your candle range low, your CRL here. So what do we have here? Candle range low and candle range high. The second candlestick that forms should open in the range. We should see buyers pushing the price up as if it will continue up, but at the end of the day, but I want to candle I think where I get candlestick I call mana. I be able to wiki code mager. So you want to see something like that happening. The body is below the range high, but we still have a wick above the range high. Say that's what we have. Now this candlestick should be bearish. It should be a red for bearish again. In this case we have a bearish candlestick. This candlestick is red at the high of this candlestick, which is the wick, and you manipulate the high of the previous candlestick. In this case again a sweep above this candle high again, the range high. And then the other one that forms will be, obviously we are supposed, or we want to find or to see a bearish candlestick that flows after that again. So what do we have here? We have three candlesticks. This can be either in a bullish or a bearish setup. In this case it's a bullish to bearish again, bullish to bearish. You can have the same thing happen. Let me let the scale. So this is going to be now bearish to bullish. What are we using this concept for? We use this concept to look for the entry, in continuation. So what do you have here? This is your AMD concept. your accumulation candlestick starts here. Accumulation, self-explanatory, I guess. Then we have your manipulation candlestick. Manipulation, we all know what manipulation is. It manipulates the high of the previous one. Then the other candlestick that forms should be your what? Should be your distribution. Now we see the price expanding to a certain direction. So these are the three candlesticks which we need to see. So this is going to be your AMD concept, but I'm not going to talk more about the AMD. The first candlestick here should be about accumulation. Now what you're going to be looking at, or what you are looking at now, this should be appearing on a higher time frame structure. This should be on a higher time frame. 4 hours, 2 hours. Now what do we have on the accumulation phase? We need to see the price on a lower time frame now, accumulating. I like a range. I got to range support and resistance. Then on this manipulation candlestick that wicks above, we need to see price breaking above our accumulation phase, then do whatever it does. And then on the distribution, this candlestick, we need to see a push to one direction. So here we'll be having your accumulation, say on a lower time frame, accumulation. What follows after the accumulation phase? We have the manipulative phase, or the manipulation phase, and then because you're going to have a weak candle, but let me just do this. The one that follows after this one should be your distribution again. So this is for our example here. This is for our example here. On a lower time frame, we'll be looking at something like this again: lower time frame accumulation, manipulation, and then we have distribution. So what are we supposed to look for on the distribution, or on the candlestick distribution? Favorable gap. Yes, I feel only to her entry as the price is pushing to the downside again. To continue the price, favorable gap. That favorable gap as our entry point. Price, then we are going to trade to the downside based on what? On that favorable gap that we have. Price on the favorable gap. So since prices is pushing it, we expect to see the price coming back to the same zone now on a lower time frame to the favorable gap, and possibly maybe an order block, but on most cases there is the favorable gap as your entry point, and then you can hop in above seller to the downside again. So this is what we are talking about, or what I'm trying to tell you here with the range theory. About the candlesticks, either there's going to be a bearish distribution, or a bullish distribution. Also, you can just flip. Also, you expect to see your accumulation, your manipulation, and then your distribution. On this candlestick distribution, we are going to look for a favorable gap. Now, we're time frame. What does that mean? Say this is 4 hours. Excuse me, I'm coming up with flu. Say this is your 4 hours. If this is your 4 hour, that's your higher time frame, obviously. Again, so if there's on 4 hour, expect to see on 15 minutes this happening. This should be happening on 15 minutes. Yeah. So as for the now, or the corresponding, I want to just know what you are supposed to look for again. So more 4 hours in but you are not going to have this favorable gap. This favorable gap should be appearing on your 15 minutes, where you're going to use that favorable gap for an entry. Let's go to this. I'll show you how I came up with the setup here, how I saw that the price will do what I'm trying to communicate here. So basically what you need to know, this behavior, this thing does not happen in isolation. You need to have a higher time frame point of interest, or expect one of these manipulation into an order block. Does that make sense? Here we are looking for a candlestick that taps into a higher time frame point of interest. So this manipulation candlestick, it's also a bit by any order block. I very sort about the confirmation that the price is actually going to sell. You don't just use it in isolation. If you have ever came to a point where this thing does okay in isolation, know that it did happen in that case, but most of the times you are supposed to use it the right way, and the right way in my case is going to be a confluence price tapamo order block. The same thing will apply for high inverted. When the scale is inverted, you are supposed to see an order block, and then the price accumulates before it manipulates. This manipulation should be tapping into your order block, and then your distribution price to confirm our entry. Basically, that is what I'm trying to communicate. Now let's go to the chart. I'll show you what happened here. 2 hours, very nice. On 2 hours, I saw this on 2 hours. So let's look at what we have now. What we have here. What do we have here? You can see the price was dropping. I'll just break this like I did. I'll just break it down for you. The price are a bearish again. Price are bearish at this point. First, let's start here. How are we looking at this, and what is it that I can see here? We are looking for 3 candlesticks. The first one should be your accumulation, followed by manipulation. So this is the range. There is a candlestick. This is the range high. This is the range low. Now the question is, if this is my big candlestick, is this candlestick taking it out? No, but this one is taking out. So I'm going to try by all means to go to the nearest point. I think you can see that you have 3 candlesticks, 1, 2, and 3. So accumulation, manipulation, distribution. But I'm not going to use this example here. Why? Because I cannot block or price setup. I'm going to mark this area out, even though we do seem to have something that resembles in CKCD record. Let's move on with the price and see what happened there. This doesn't give us anything. However, as you can see, relatively gap here to but the price never came to this favorable gap here. What do we have on 2 hours? We have a price that taps into an order block. I think this price here left these highs. I can use this LQML. Obviously, we are supposed to have an order block on the wick. The price does tap on the order block and drops to the downside. As it drops to the downside, it breaks structure here. We have a break of structure here. After the price breaks structure, what does it give us, or what does it leave us with? It goes back into a range. After break of structure, it pushes back into the range to what we are supposed to be having an order block here. I'll just keep on dropping to lower time frame so that you see what I'm talking about. Come on, 2 hours. By the time you get drop to 30 minutes, the price does come back to break structure again to the downside here. Another break of structure here. Series of break of structures again. And then lastly, we have this low that's not yet taken out. So I'll just use this as my draw on liquidity. Really what I'm expecting to see the price coming to take it out. Where were we? We are coming from this point. Now we can see that you have an order block. The price does come to the order block here. There's candlesticks and order block. Price come to that order block. But now let's see how does the price behave. It's an order block. How does the price behave? First of all, I can use other confluences like this. The first touch here, just to show you what I mean and get rid of the setup if I saw it well on time. So there's the first touch here. I learned the strategy called Diseko. That's where I'm entered, or that's where I went for my mentorship. That touch plus order block in this case strategy again. So we have an entry here. However, you know what something that tells you what the price might reverse. How it's anyone, because chances are there's liquidity resting above some highs. The price might take those highs out again. So you're going to have another. You're supposed to have another confirmation. Now I can see that here I have CRT. I have my range theory model here. What do we have? We have 3 candlesticks. I said the first one should be accumulation. In the corner, they take you out. The higher thing, they take you out. This is my range high, CR high. Then this is going to be my range low, CRL. So what you are looking at now here, the second candlestick went on, opened in, was pushed up, but later was rejected back in. You can see the body of this candlestick higher. So we expect to, or we want to see something like this happening, where we have the high being taken out, but the price later closed back in again. So in this manipulation, it tap into an order block again. Like in this case, you can see that we have that high tapping into a point of interest again, point of interest here. So this is your point of interest on this order block that we have here. We can see a point of interest on which this manipulation taps into that. So this is your accumulation or candlestick, manipulation, and then there's going to be a distribution. Now from this candlestick, now what are you supposed to look for? We are supposed to look for a fair value gap on this candlestick here. Now I'm on 2 hours because I know my point of interest is this candlestick, or my where I'm supposed to look for entries is supposed to be on this candlestick. I would 3 again. So on this candlestick, I'm supposed to be looking for entries on this specific candlestick here. So you just mark it the right way. So this is my entry candlestick. I'm supposed to be looking for entries on this candlestick here. For you to look for entries now, once you identify this on a higher time frame, we are going to drop to a lower time frame. Come on, 2 hours. So I'm going to drop straight to 10 minutes. Let me just do 10 minutes here, because the time frame I'm just choosing to use 10 minutes for my own reasons. Lawyer, now you can have your own reason and what to choose, which time frame to use. So what are we looking at now? We have, remember that this is where you're supposed to look for an entry. Now the price, remember that trading the boom spike. So this is your range high, manipulation, and then we have the distribution. Now distribution arona, if you remember that distribution arona is similar one here again, but one fair gap on price is also drop from the fair gap there. Now you can see that we have a order block. This is the first candlestick, second candlestick, third candlestick again. The first candlestick is this one, the second is this one, the third is this one again. So on this candlestick that we have, we are going to be looking for a fair value gap on this candlestick here, level 2. Our fair value gap, we are looking at a series of 3 candlesticks. This is your accumulation candlestick, this is your manipulation candlestick, this is your manipulation candlestick, then we have your distribution candlestick. Remember that these are candlestick is here. Yeah, what I say like this. What time frame you get? This is your accumulation, manipulation, distribution. So I'm going to be looking for entries on this candlestick. Yeah, with 3. Fair value gap mohoni candlestick. Fair value gap hona candles di tshwana di bearish tsotlhe kana bullish tsotlhe kana go simolla bullish. In this case it is similar ka bullish, bearish. So I'm going to be looking for an entry on this candlestick here, on this fair value gap. Again, I'm going to be looking for an entry on this area here. Expectation is to see the price coming back to that area there. Try to feel it and then drop, possibly drop to the downside. But as you can see, the price did deep, very much deep into the zone. Instead of just a warm favorite gaping the link, it's in a tata into the zone. Because of what? Because for making a boom and crash. Boom and crash is spikes that thing, it's another thing. Now what do we have? Her price is a month. Her price is a month. We still have the same thing. We have our CRT happy. CRT. This is a range high. This is a range high, range low, range high, range low, manipulation, distribution. Now, more distribution here about the favorite gap. Series of 3, 1, because I think candlestick can lay 1, 2, 3. So to confirm, let me go to 30 minutes to confirm that indeed that is where we had our entry. To confirm that is where we have our entry, let's look at this. Very good. 1 hour. As you can see, accumulation, manipulation, distribution. Yes, it shows much better. More 2 hours. You confirmation that confirm the entry or America or not. Range low, CR low, CR high. Accumulation, manipulation, distribution. On the distribution candlestick here, about the favorite gap. On this candlestick, about the favorite gap. Higher. So I'm going to drop to 30 minutes. But I do know work. Entry attack I want more time frame because give 1 more 10 minutes. That's why I ended up looking for an entry. But very good, that's what we have. So favorite gap pattern again, we have an entry to the downside on that favorite gap. Series of 3, 1, 2, 3. Entry on the favorite gap, the price pushes to the downside. What are we targeting? I expect to see the price coming to take out this low, the range low. So you got one price a break and then happen with them. But at this point in time, this is what we have, and this is why I knew our price will sell from this area here. I knew that the price will sell from this area that we have. I knew very well that we are going to sell in this area. That is why I shared that setup, sell setup. This is me just trying to break down Kanya CRT. What we have, we still have a break of structure here. We use the favorite gap above that break. Has now break a structure about the favorite gap payment. That is where we are selling, or where we are selling favorite gap. As you can see, the price dip into the favorite gap here, and then it drops again. I'm supposed to, or I'm expecting the price to keep on. My target is going to be the price taking out this range low. That is my target. If it doesn't show clearly, I'll still be available to break this concept down for you, because now I can just use it here, but I don't need to explain to anyone, because once I understand what I'm doing, it becomes very simple for me to go around. But that is what I was looking at video here. So with that being said, on the next one, subscribe, like and share. Thanks for everything.